Good morning, everyone. My name is Sriram from the Commodity Research Desk at Reliance Securities. Welcome to the weekly commodities update. Beginning with the bullion side again, internationally gold and domestically too, gold futures continue to struggle this week as the US dollar and the benchmark bond yields remain elevated. Data coming out of the US also reinforced bets that the US Fed could hike rates in July, and this also weighed on sentiments. Additionally, higher interest rates from expectations from other central banks too weighed on gold prices. Last week, we saw Bank of England hiking rates, and furthermore, other central banks like Norway also hiked rates, and this too kept the upside limited for gold this week. Looking ahead for the coming week, the key trigger will be the U.S. Fed Chair speech today in a bank forum in the Eurozone, which could offer more clues on the future rate hikes from the U.S. Federal Reserve. Earlier this week, ECB President Christine Lagarde outlined a lengthy fight against price growth, which must dampen demand and force firms to curb prices. She also added that it is unlikely that in the near future that the central bank will be able to state with full confidence that that the rates have peaked, which suggests that more rate hikes is possible from the ECB. We expect similar speech on similar lines from the US Fed Chief Powell as well, who will mention about the inflation remaining elevated, and this will continue to push the dollar index higher and keep the upside limited for gold and silver prices. However, after the Fed Powell speech, the Fed favored inflation numbers. The PC price index is due this week, and traders are bracing for a spike in the Fed favorites inflation indicator, also weighing and also weigh on prices this week going forward for gold and silver. On the charts, we feel that MCX gold futures broke a crucial level of 58,500, and prices also remained or sustained below this level this week as well. Further consolidation below this level will pull prices to all the way down to 57,500 going forward. And now on the upside, 58,500 remains the key hurdle, and only a sustained trade above that will push the prices higher. Otherwise, markets could remain with a trade with a negative bias. On the international side, we see 1915 and 1900 remaining the key supports for gold, and a break below could pull prices to 1875. On the upside, resistances are at 1935, 1940, and on the up and 1960 levels for the August futures for gold this week. Moving on to crude, both domestic and international prices struggled this week as demand concerns outweighed supply shortages. In his testimony last week, US Fed Chair said that it will be appropriate to raise interest rates somewhat further by the end of this year, and this kept the upside limited. The data from the US in this week also reinforced the idea that the Fed could continue its aggressive rate hike policy to curb inflation. Additionally, a rise in gasoline and distillate inventories last week also raised concerns of demand. US gasoline and distillate inventories rose by 480,000 and 430,000 barrels respectively during the peak summer driving season, reflecting weak demand for the markets. Prices did find brief support as Russia faced a brief rebellion by a private military group over the weekend, raising supply concerns, but the supposed coup fizzled out and markets focus on data, and possibly going forward the Fed speech today will be a key trigger. Looking ahead, as I mentioned, Fed speech will be key trigger, but EIA data on the inventory side will be a key driver of markets. Recent numbers have shown a fall in US crude oil inventories, but at the same time has also reflected a rise in gasoline and distillate inventories, reflecting weak demand for the products going forward, and that could cap upside for crude oil prices. On the charts, we feel NYMEX WTI August supports are at 66.65 and 64.50, and on the upside, key hurdles remain at $72 and $74 for this week. Domestically, we see a big range of 5,300 on the lower side to 6,000 on the upside of things in this week. Finally, on the copper side of things, both domestic and international prices struggled this week as well on economic worries, despite upbeat Chinese official comments. Chinese Premier Li Kang said this week that China will take steps to boost the demand and invigorate the markets. The yuan too briefly gained against the greenback after lower than expected USD CNY fix during the week. And also speculation leading to that the Chinese central bank PBOC will take steps to curb further depreciation of the currency and lend some support to the base metal sector. However, as I mentioned, hawkish comments specifically from the Fed and ECB and the Bank of England officials last week raised concerns of a global slowdown, and this kept the upside limited for the copper markets this week. Additionally, we also saw that profits earned by Chinese industrial firms dropped by almost 19% from a year earlier in the first 5 months of 2023 amid stalling economic recovery, weak demand and margin pressures on the companies, and this decline followed a big plunge of 21% in the prior period. So overall demand remained weak for the base metals, continue to remain weak going forward. But like the precious metal markets, base metal traders will look ahead to the Fed Powell speech scheduled later in the day. But after the Fed speak, which most likely appears to have been factored in by the markets, base metal traders will look ahead to the non-manufacturing and manufacturing PMI numbers from China this week. Of course, weak numbers will definitely be a negative for the base metal sector. On the charts, we feel the MCX copper June will remain in a broad trading band of 690 on the lower side to 745 on the upside of things in the coming week or so. So that's it from our side. Thank you very much for watching. Have a pleasant day and a week ahead. Thank you.